Good morning, ladies and gentlemen. Welcome to the SYSGROUP PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll, and I'm sure the company will be most grateful for your participation. I'd now like to hand over to Adam Binks, CEO. Good morning.
Thanks, Mark. Good morning, everybody. First of all, I just want to apologise that we're not on camera today. So for the first time after 2.5 years, we're back out on the road on a real life roadshow, meeting investors and potential investors once again. So unfortunately, we've not got our great video conferencing equipment with us. But you know, I'm sure you're sick of the look of both Martin and I anyway. So that aside, let's get cracking. So thanks for joining us today to listen to our update for the first half of our HY23 period. For those of you that are new to the company, new to SYSGROUP, I'm Adam Binks. I'm the Chief Executive Officer. I've been here at the business since 2014. I originally joined as COO. And I took over as Chief Executive in April 2018. And Martin joined me lastly in that year in July 2018 as CFO, joining me from NCC Group. So, you know, that's us, and we should move on. So look, again, for those of you that have joined us plenty of times in the past, I apologise for sounding like a broken record, but I'm sure we've got some new faces on the call that will want an introduction to the business. So look, we are an award-winning managed IT services provider with specialisms in cloud hosting and managed security services. We've got 6 offices across the country, so we've got a nice spread and coverage of the UK, operating as far as our newly acquired Truststream business up in Edinburgh, right down to Newport in South Wales. And then obviously our head office is in Liverpool. Again, those of you that have heard the story before, you'll know about our new sales and marketing hub in Manchester, which I'll talk a little bit more about later on. And then we've obviously got operations in Bristol and in London as well. I've kind of changed the way we present the numbers. So we're looking at forecast numbers on the left-hand side as part of this corporate overview slide. So these are forecasts as put out in the market yesterday by our broker Zeus. So, you know, we're on a run rate of 20 million plus revenue, a business which will deliver 3.3 million of adjusted EBITDA. We're servicing over 900 customers in the mid-market. 99% UK based. We've got 120 team members based across those 6 offices across the country. So you know, think in previous periods, just around the COVID pandemic time, our headcount had reduced slightly. We were probably back up to what is a good number for this size of business. And obviously we operate the business on a 24/7, 365 basis. With real people in real offices around the clock to service our customers as and when they need us. And that's a big selling point for SYSGROUP and for other businesses that provide true 24/7 cover. It's essential these days. You know, being a managed service provider, it's not easy to set up an MSP and just become one overnight. Demonstrated through the partnerships and accreditations that you'll see on screen here. And actually, I've got a bit of a slide on it. I'll talk more to it later on as we move through the deck. But partnerships are key for new prospects and existing customers, assessing our abilities to utilize and implement technology on their behalf in order to run their systems. So in terms of a general overview of SYSGROUP's capabilities, as I said earlier, we have specialisms in cloud hosting and managed security services. So cloud hosting is the real focus for SYSGROUP. But as an MSP, obviously we can support the rest of the IT architecture that sits around and outside of the data center that many businesses utilize every day, right from connectivity through to end user support and even procurement of hardware. But our focus is to use technology to transform people's businesses and bring them into the cloud, whether that be our own SYSCloud 2.0 offering, which sits in our data centers. Sorry, not our own data centers, but our co-located data centers, or whether that's to take them into the public cloud, be it Microsoft Azure or Amazon Web Services. We also have skill sets that cover both of those technologies. And actually the real shift that we're seeing these days, and when people implement technology correctly, it's usually a hybrid of the two. So we'll use a public cloud solution, where it's right to do so. And actually they've got a service offering that really supports a customer need. However, the stuff that isn't right, fat client applications, for example, legacy ERP systems, which many businesses still use and aren't really cloud ready and right for the public cloud, we'll host them on our SYSCloud platform, which is obviously a great sell and easier to manage for SYSGroup. So just to go into a little bit more detail on what we do, some of you may have seen this slide before. It all got a bit complicated. It had grown legs and arms. We've kind of condensed it down into something that's a bit more digestible. And actually later on, I'll talk more about a project that we've got happening internally to streamline this stuff even more. But as I said, our specialisms sit within cloud hosting and managed security. But obviously we have all of the ancillary services that go around supporting those technologies. And the key for SYSGroup as a managed service provider is that word manage. So we don't want to just provide you with the service. We want to provide you with the service and manage it for you. So we have an ongoing relationship. That's why we're underpinned so well with contracted monthly recurring revenue. That all comes from our managed services business, be it connectivity, be it backup and DR, infrastructure, and even consulting services in some scenarios. So, as you can see, we've got quite an arsenal of services that we can provide to our customers. Businesses typically want a one-stop shop solution. They don't want to have to reach out to multiple providers when they've got a technical problem and have them all blaming each other as to whose responsibility it is. So, as we've moved through our acquisition journey over the last 4 or 5 years, we've built up a portfolio now where we truly can provide end-to-end managed services to our customers. And then in terms of our customers, our sweet spot it really is in that mid-market. But we've also got some fantastic, well-known names on the customer list. And I think this is probably the first time I've shared the customer list. I think it was a request from one of our institutional investors on the last roadshow. So, we don't do everything for all of these, which is a good thing because that means we've got white space opportunity. That means we've got upsell opportunity. We can go on and we can take more wallet share from some of these customers that you can see on the screen. I'd love to be reporting that we provide all of our services to all of these people right now, but it never is the case. It will never end up the case, but we're working towards selling them as much as we possibly can. And then just who we do it with. I said on the first slide when I was showing the corporate overview, isn't it a real importance around who our technology partners are? When you go through a prospecting process or you're pitching to a new client, even existing clients, they want to understand that you as an MSP are truly invested with your technology partners. So it's not just as simple as putting these logos on a presentation and showing them. We have to go through quite vigorous processes to get the accreditations from our vendor partners. And that consists of commitments in terms of sales numbers. It consists of training our technical teams to their standards, and also training our sales teams and our marketing teams from a commercial point of view in order to be able to advertise the service or the solution, as well as talk commercially and in a sales scenario about the solution. So, we're invested in the partners just as much as they're invested in us. And again, as I say, when you go through a prospecting scenario, people are looking for us to have these logos either at the bottom of our presentation or on our website. And they know once we're able to use these badges that we're truly invested with these partners, and actually we're experts in the field. So look, that's a brief overview on SYSGROUP. Again, apologies to those of you that have heard it a million times before, but I hope anybody new on the call enjoyed it. I'll move on now into the period under review, being our first half of the FY23 period. So, 49% increase in H1 revenue. I'll call it out straight away. It's largely acquisition driven. As you'll know, we did 2 deals right at the beginning of April. So the very start of this period. There is a small single digit amount of organic growth that's in there across the group, which is great, despite the fact that the economy is really, really challenging right now. We are still managing to sell to our existing customers and even a few net new ones. Profitability, adjusted EBITDA, has increased 25%. I'll let Martin talk to that when he gets onto his slides. Both the acquisitions, Truststream and Orchard, they're both doing well. We've worked really, really hard to integrate as much of those businesses as we can so far. And actually all of the major milestones that we wanted to achieve, which we set out back at the start of the financial year, being people integration, CRM integration, and financial integration, that's all been completed. Those of you that know the story about our Manchester office, which is our centralized sales and marketing hub, which we opened in June last year, we've now got that fully resourced. In the last month or two, we recruited the final person to come into that office. It's not making a contribution yet. We are starting to see some green shoots, but we forecasted it to be impactful for 12 to 18 months away. As those people get up to speed and we battle through the economic challenges of building further pipeline. We've expanded our presence in Edinburgh. We've opened up a new Edinburgh office to support the growth in the Truststream business that we acquired. We're going to be investing in our cybersecurity offerings that are delivered from that location. So we've moved to slightly bigger premises. And we've also launched a project internally, which I alluded to earlier, what's known as Project Simplify, which I'll take you through in a bit more detail later on. But for now, I shall hand over to Mr. Orchard to take us through the numbers.
Yeah, thanks, Alan. Okay, so we're just on the financial highlights slide, so you can just see the headlines here. A lot of this I'll cover in a bit more detail on the following slides, where we talk about the income statement, the balance sheet, and the cash and net debt position. But essentially, we're reporting a very strong H1 period in FY23. So as Adam mentioned, it's mainly acquisition led. So we acquired Truststream and Orchard in April, which is when our half year started. So a good revenue performance. We're very pleased with how those businesses are performing over these first 6 months. I'll talk about the revenue mix more on the next slide, but it's quite a key component for understanding our revenue and our GM. So let me just leave that to the next slide. But essentially, that has shifted. In terms of the same period last year, we're at 86% managed recurring income. That shifted to 75% this half year, but that was entirely expected when we made the acquisitions. And in fact, we messaged that, I think, back in June. Adjusted EBITDA is exactly on track where we expected it and wanted it to be at the half year. So again, a good sign that things have sort of played out in this 6 month period as we expected. We're pleased with the adjusted EPS. That's a good number for us at the half year. It's good to show the progression on that. The basic loss per share, again, I'll be able to explain on the next slide, because clearly we've got some exceptional costs and higher amortization, which I'll explain on the next one. And equally net debt I'll cover separately. So in terms of the income statement, and again, I'm conscious that there's probably people who've joined us who are new to SYSGROUP. Our revenue, Adam's talked to you a little bit about the services we do in terms of those 7 types. In terms of if you like, an accounting side to that, we have 2 segments for revenue. One is managed IT services and one is value-added resale. Just as a very quick brief on what they mean, managed IT services is contracted income. What that means to us is something that's between 12 months and 3-year contract terms, and typically covers things like the cloud hosting, the managed services, disaster recovery, security. So that's where customers have signed up to a longer term contract. We bill them on a monthly basis. In fact, we typically bill them monthly in advance or quarterly in advance, which goes some way to kind of explain a little bit on the cash conversion, which I'll cover separately as well. Value-added resale. So for us, this is once we provide managed services to customers, we found they typically want us to procure licenses and hardware for them as well. So this is thinner margin. So hardware, typically, this could be buying service for them. It could be for sort of the old on-premise sort of model. Those can typically be sort of 20-25% margin pieces for one-off procurement. We recognise the revenue and the cost as a one-off sale, and equally licenses as well, which again will be at that margin level. Managed IT services, as you probably have gathered from our announcement, is typically around 60-65% margin. The reason why I can't explain that is it goes a little way to explain a bit about revenue mix and gross margin in terms of last period against this period. So Truststream and Orchard both have higher proportions of value-added resale than the legacy SYSGROUP business. We knew that when we bought them, that they've been good businesses for us to buy, but it has moved our revenue mix back to actually the model we were operating a couple of years ago. During the pandemic years, as companies and customers were not spending money on asset refreshes, we naturally found that managed services were becoming a higher proportion around the sort of late 80s. It's now reverted back to the 75%, 25% model, which if you go back in our numbers, you'll find we had 2 or 3 years ago. In terms of the gross margin mix, both Truststream and Orchard have slightly lower gross margins, which I say we knew when we were diligencing them and ended up buying them. That's the prime reason for it moving from 60% to 50%. So you've got a revenue mix angle where you've got more value-added resale at that 20% margin side, and you've got a business model element of the acquisitions coming through. I'd probably expect GM maybe to tick up. It kind of depends on our VAR performance in H2. It's kind of too early to say where that'll end up, but it wouldn't surprise me if GM ticked up to 51-52% by the end of the year. In terms of the rest of the P&L, I always say this, I think we've got a pretty simple P&L and, if you like, balance sheet position. Overheads are predominantly people costs, so around 3.2 million, or 3.2 million of overheads is people based. You can see that we've had an increase of 700k from the same period last year. That's entirely obviously due to the 2 new companies coming into the businesses. We have given pay rises, you'll be pleased to know, as well. At the start of the year, we make those in April every year. And actually, one thing probably to add here, because it's typically a question that comes up around recruitment, is last year, I think everyone, probably all businesses, and certainly we're including this, found recruitment very difficult. It was a really challenging year last year. It has eased somewhat this year. So our recruitment this year has been a lot better, which is good to see. I won't dwell on adjusted EBITDA. You can see that for yourself, which is good growth from our perspective. We're happy with that. In terms of the below the line items, we're not CapEx intensive. You'll find on the cash flow slide when I come to it, we've spent about 100k this year, which is generally for general cyclical internal business IT equipment. Amortization of intangibles naturally has gone up because we've made the 2 acquisitions. You'll find a similar cost level in H2. Exceptional items, predominantly the professional fees, as you'd expect from the acquisitions, and we've incurred about 100k of integration and restructuring costs in H1. Orchard is very well integrated already. We've worked really quickly on that one. Truststream we'll be working on more in H2. We're pleased how they've gone so far. Finance costs, I just want to call out this one, just in terms of the increase in that number. About 120k of that is bank loan interest. It's not the full 240. We've now got about 100k of cost going through that 240 number, which is non-cash, or let's say sort of one-off cash, and that relates to the loan arrangement fee being amortized. But also you'll find on our contingent consideration for Truststream, you have to do a discounting calculation on it. So about 80k is a discounted charge going through the P&L. So yeah, I think that's probably as much I'll go through on the P&L. I think it's pretty straightforward to understand, and will certainly give you a shape of what we'd expect in H2 as well. So just in terms of the balance sheet, again, if I was just to describe our balance sheet to someone new, I just think it's entirely understandable. There's nothing strange in this balance sheet. It's very simple. At the top end, clearly we've done an M&A. We've done M&A over a good 5 or 6 years. So we've got an intangible asset in goodwill that sort of increases with each acquisition. And the increase you can see there against 31st of March 22 is for the Truststream and Orchard acquisitions. Property, plant and equipment, I've mentioned we don't spend loads on CapEx. You might wonder why in that case we've gone up 700, 800k. Well, we've renewed a couple of property leases in H1. And again, if you know about your IFRS 16 standards, you have to capitalise property lease rentals as right of use assets. So mainly that's property renewals. Working capital, all balances have increased. That is bringing in Truststream and Orchard balances. In terms of working capital management, we target 25 debtor days. I say we're able to do that because we do invoice in advance, whether it's monthly, quarterly, etc. New acquisitions haven't altered that, so that's a good position for us. I guess in terms of what you're seeing as new on that balance sheet, you'll see contingent consideration. If you add those 2 numbers together, that's around, it's 2.9 million. That's 3.1 million full contingent consideration liability for the Truststream acquisition, and then the 200k discounted against it to bring it to 2.9. We've included that liability in at the full value. Truststream is performing very well. When we come to the year end, we'll obviously know how they've performed fully in that first 12 months post acquisition, and we'll be able to refine that contingent consideration liability to exactly what we expect to pay. The earnout's over 2 years, just to be clear. So there's a year 1 and a year 2, hence the in 2 different places. The bank loan I'll cover separately, I think, on the cash and net debt position. But all in all, I think it's a well-controlled balance sheet from my perspective. So just talking about cash flow and net debt, again, just as an overview, SYSGROUP is a good, strong cash generator. At operating cash level, we generate strong levels of cash. We target 80 to 90% cash conversion. You'll see that this half year we managed a very good 120%. I don't get overexcited about that. I mean, that's a good number clearly to achieve, and well done credit control team. But some of that is due to having advance payments from customers for value-added resale deals where the related supplier payment is going to fall into October. The reality is, come year end, I'd expect us to be around 90 to 100, which will be a very good result and as expected. CapEx, again, last year, why have we come down from last year? Last year we had a couple of office refurbs in our Newport and Manchester offices. So we had a slightly higher spend in the comparative period last year. This year is probably slightly below where we'd expect, but even so, 100, 150 isn't far off what we should be spending. Acquisitions, probably just worth me mentioning this again to people who might be new on this. The Orchard acquisition, which was the acquisition in Bristol, was a £1 million consideration that was paid out of existing cash balance. So we generated that cash to buy the business. Truststream was purchased with a new 8 million RCF facility we have with Santander that was agreed in April, and we drew down £4.5 million pounds to fund that acquisition. We also used 850k of our own cash resources. I think that's probably broadly it. I mean, you can see in the interest line that gives you a truer picture of the cash element, but of course, I mean, you've also got some lease interest cash flows going through there as well. In terms of net debt, we hold a very strong working cash balance, 4.2 million. The bank loan is the RCF with Santander. So we've got 2.8 million headroom remaining in that facility. Net debt, we've moved into a net debt position from net cash at the end of last year, obviously through making the 2 acquisitions. And the contingent consideration, as I mentioned, is for a 2-year earn-out for Truststream, which I'm sure we'll have another look at it at the year end and see what liability that needs to be. It's a strong, SYSGROUP's a good cash generator is really my message here. We're well within our banking covenants, and both Adam and I really take a pretty sensible, conservative view on where we want to be against any debt positions. So we're managing this pretty well, generating cash to continue to invest. Adam, do you want to?
Very good, thank you. Right, just I alluded earlier in the highlights slide to a new project that we've launched internally known as Project Simplify. So Project Simplify is basically an initiative within our business to do exactly what it says on the tin, simplify things. And actually, I'm going to tie this in kind of to one of the questions that we've got come through on the Q&A so far. I tend to leave until the end. But one of the questions is, what would we say gives us our competitive edge? Now, it's a great question because it's always a difficult one to answer. You know, there are many businesses in the managed services space that all offer the same services and solutions, but package them up differently. I think what gives us our competitive edge is our consultative approach. So we've always prided ourselves on tackling the sales cycle from a consultative aspect. And what that actually means is by sometimes refusing to do business with a new prospect who isn't prepared to pay for our time to get us over the initial hurdle of understanding what they've got so we can tell them what they need. Now, we've obviously grown the business through a number of acquisitions over the last 3 or 4 years. And actually, you know, our service offering, our solution offering has grown arms and legs, and elements of it have grown fingers and toes as well. You know, I showed, or sorry, when I talked about the product, the solution slide earlier, in terms of our service offering, we used to show it in a very different way. Those of you can remember that kind of spider diagram, where it was growing out exponentially. And that's kind of made us realize that actually, whilst we've got this great suite of products and services and solutions that we can offer to our business, we probably need to present that in a bit of a better way and a more consultative way to our customers and to our prospects. So we brought in an external agency to help us understand, you know, from the outside looking in, where we have our own successes. And what we're going to do over the next sort of 4 or 5 months in time, or all going well in time for the beginning of the new financial year, is we're not going to rebrand the business, but we're going to change our image completely and move away from that of a technology-driven company that is trying to present solutions through the use of product names into that of a true consulting services provider that just happens to have a huge suite of technology services and solutions to back up what we say we can do. So we're going to revamp our entire go-to-market messaging. We're going to refresh our branding and our website. So we'll change the look and feel, and just, down the bottom right-hand corner of that slide, that's a brief preview of what it may look like. It's still in its very early stages at the moment. But we're also going to bring this message right through our business. So we're going to do a big launch internally to all of our teams, right from sales through finance, marketing, and all the technical teams that we've got. So actually, we've got everybody on the same page, understanding that what we want to do is run a consultative process with our customers, but we want to keep it simple. It's really important these days to keep things simple for a buyer. I think when people have things presented to them in a simple fashion, it really, really helps their decision-making process. And if they want to get more into the technical details, we will have that information available. We'll be able to take our customers and our prospects as deep into the journey as they'd like to go from a technical perspective. But I think revamping with a fresh image coming out in FY24, as I say, driven by consultancy, is going to be a really good thing for us as we move through what's going to be a difficult economic landscape. So just before we get towards the end, I just thought I'd give an update on both Truststream and Orchard. So, as I said earlier, both acquisitions have been great for us. If I had my time again, I'd buy both businesses again. There's nothing that I regret about either of them. And I'm sure Martin feels the same way. We've done a lot of work on integration, and that's come through Project Fusion, which we've run over the last couple of years to unify all of our systems onto a single pane of glass operating system. You may have heard me talk about this before, but one of the key things for us to do pretty much immediately after acquisition is what I call people integration. So, the biggest risk in any deal is losing good people. People are adverse to change. They panic despite the fact we tell them, nobody's job is at risk. On the day of acquisition, people still get nervous, and you find that you may lose the odd good person along the way. So one of the things that we do is we do people integration really, really quickly. So we send our people and culture team into the site or sites that we've acquired, and then we get those employees transferred over to the actual PLC. So by the time they reach their next payroll date, they're actually paid by SYSGROUP PLC. And I've always said, you work for who pays your salary. So when you see that appear on your bank statement, when people see that appear on the bank statement, they know they're part of the SYSGROUP team straight away. And that's really helped us with staff retention on our acquisitions. We get everybody in our branded jumpers and T-shirts and whatnot to get them feeling involved straight away. And we expose them to the wider business as well, and the opportunities that exist within the wider business. So people integration is always one of the secrets to our success and key things for us to deliver on in the initial stages of the integration process. Obviously, I mentioned before, we've moved the Edinburgh team into a bigger office. So we knew when we were buying the business that they'd outgrown their existing space. We've opened up a shiny new office, which is just costing us a little bit more than the existing cost that was already in the business for that office. But that's a SYSGROUP branded office as part of the integration process as well. Again, helps with the people integration. We've got the team working from that office now 5 days a week. In fact, across the vast majority of our business, we've got almost everybody back in the office working 5 days a week, which I think is really, really important for not just SYSGROUP, but for any business. I think businesses that are still operating on a work from home model and actually discouraging people to come into the office will start to suffer long term as they miss out on collaboration and innovation from their teams. Truststream's been doing a great job of delivering contracts and renewing existing contracts. Some big names in there: Student Loans Company, Tesco Bank, DVSA. These are all businesses that we're hoping to upsell our managed IT services to in the future. And one of the biggest drivers that we had with buying the Orchard business, you'll remember me saying back in June, Orchard was typically below our normal deal size, but we got it for a pretty good value. And actually, one of the key reasons why we bought it was for the people, to strengthen the Southwest operations that we've already got. And that's proved to be really, really good for us, and is working out well. And actually, with the majority of those people in the Bristol office now going between there and the Newport office and working across the customer base, across the group, which is a fantastic achievement for us. So just to wrap up before we move into a couple of questions, SYSGROUP's got a business model which is, I use both words, proven and sustainable. Despite the revenue impact that we saw through COVID, I think, the technology or the use of technology that most companies were adopting in order to sometimes just keep the lights on, or others managed to move forward in the pandemic. And us being a part of helping with that, it really solidifies our position and demonstrates that we're still very, very relevant. And actually, as we move through the next set of challenges that we've got in front of us, businesses know they need to invest in technology. They know they need to outsource in order to do it well and do it right. So they rely on businesses like SYSGROUP in order to help take them on that journey. To protect their own margins. The use of technology really does help protect margin for businesses, and we'll find that businesses are going to be exploring those options more and more, and we're seeing some of that in our existing pipeline discussions now. So that's really good for us. As I said, acquisitions have been great for us. It will create some good upsell and cross-sell potential. I know everybody says that it's the most difficult thing to do. But it definitely exists because we've seen the white space analysis on the bases. So we know that we'll have some opportunity coming out of them in the future. As Martin quite rightly talked about, we're hugely cash generative. I think it's really important that we're turning our profits into cash. That's a great metric to be monitoring, and we're doing well at that. M&A is still on our radar. It's not the easiest thing to do at the moment, but we're well and truly committed to being and I'm sure somebody will ask me the question of how we're going to finance deals moving forward, but I'll head that one off straight away with, it will depend on what the opportunity looks like at the time, and also what the landscape looks like. So look, all that said, we're confident in delivering against the full year guidance that's out there. It's not going to be easy by any means, but both Martin and I and the other 118 members of the team here that support us every single day are working hard to continue to delight our customers and sell more to them. Mark, back over to you.
That's great. Thank you, Adam. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of the screen. But just while the guys take a few moments to review those questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. Adam, as you'll see, you've received a number of questions from investors throughout your presentation. So firstly, thank you to everybody for your engagement this morning. Maybe if I may, Adam, just hand back to you, and if I could ask you just to read out the questions and where appropriate, give a response, and then I'll pick up from you at the end.
Yeah, fabulous. Thanks, Mark. So the first question, I probably kind of just answered in my closing statement there, but I'll read it out anyway. What appetite do you have for further acquisitions? And in an ideal world, what would you look to add to the business? So we've definitely still got an appetite for acquisitions. 100%. We're committed to delivering on our M&A strategy. In terms of what we'd like to add, it's quite a varied question. More of the same to give us scale. but actually we are looking beyond the realms of just the IT services that we offer, potentially looking around other types of businesses that go deeper into the application, or a bit heavier on the consulting services side of things. But that's probably about as much as I can say on that for now. So hopefully that answers your question. And then the second question is also, are all your acquisitions fully integrated and delivering in line with your expectations? Again, hopefully I've covered some of that in the presentation. Other questions came in early on. The acquisitions, both the acquisitions that we made in April, are largely integrated in line with the milestone objectives that we set out earlier in the year. So the important things: people, finance, CRM. We've still got some technology integration to do, and that's happening throughout the course of H2. Probably will overlap into the first half of FY24. But that's, it's not noticeable really to customers of the outside world and doesn't impact our business operations. Key things to get integrated are always customer management, finance, so we own the billing relationship and we can get on with that very, very quickly. And obviously, as I mentioned earlier, is people integration. And just in case you're talking about prior acquisitions that have been done before this reporting period, the answer to that is yes, everything's 100% integrated. And also even the corporate stuff in terms of hive ups into a single trading entity. So at the 31st of March 2022, we were operating as a single trading entity, which is SYSGROUP Trading Limited. We've since added to that with the acquisitions being the Truststream Holdco and the Orchard Holdco. The end of this financial year, we'll hive up Orchard into the SYSGROUP Trading Company, but we'll probably do it in another 18 months for Truststream because of the earn-out. So hopefully that covers that off. Another question which I was kind of joining into earlier on, how have your main competitors performed over the comparable period? And what would you say gives you an edge? So I think I've answered the edge bit already. In terms of our own competitors, obviously, we look at the ones that we can, the publicly quoted guys that's easy to get the numbers from and have to report in the same timeframes as what we do. The answer is we've probably all performed round about the same. We're a bit smaller than the two main ones. So actually that's probably given us a bit of an advantage to be able to grow a little bit easier, rather than having to maintain the huge revenue numbers that those guys have got. But I think, it's public information as to who they are. I suggest you do your own due diligence and take a look yourself and do the comparisons. And then we've got, what should we expect in terms of new flow over the next 6 months? I'm guessing that's supposed to say news flow. I don't know. It's got me that question. Do you mean from the press or do you mean from SYSGROUP? In terms of news flow, if the question is, are we expecting any surprises? I'm certainly not. Martin certainly isn't. We'll be putting another trading update out in early April. We'll be complying with our normal regulatory requirements to put out any news flow that we're mandated to do so on. So significant contract wins. I think the question is alluding to, are we expecting to do a profit warning? But the answer is no. So, hopefully I've covered that off for you. And then the final question, last but by no means least, is there any scope for expanding overseas? I suppose there is scope to do so. Are we focused on doing that at the moment? Probably not. We're still very keen to grow our position in the UK market and focus on the UK market without the need to worry about foreign exchange risk. or foreign regulation and laws and whatnot. However, all of that said, if there was a fantastic opportunity that made absolute sense for the shareholders, for us to deliver an opportunity that was overseas, then by all means, we'd look at it. And that concludes our questions.
Yeah, you have, Adam. Thank you very much indeed. You've taken all the questions from investors, so thank you very much indeed. If any further questions do make themselves available, I'll obviously show you those after today's meeting. Adam, I know investor feedback is important to you and to the company, and I'll shortly redirect those on the call to give you their thoughts and expectations. But before doing so, I wonder if I may just ask you for a few closing comments before I redirect them for their feedback.
Yeah, sure. Look, I'd just like to thank everybody for taking the time to come and join us and listen to us once again. It really is appreciated. And as Mark said, that investor feedback is absolutely invaluable to us and always drives us for the next session. So if you could take the time to just answer those couple of questions, I'd be most grateful, as would Martin. But thank you very much for joining us, and I'll speak to you all again at the next reporting period.
That's great. Adam, Martin, thank you once again. Ladies and gentlemen, please can I ask you not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This may take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of SYSGROUP, I'd like to thank you for attending this morning's presentation. That now concludes today's session. Good morning to you all.